You know I mentioned it going into the break, but I actually wanted to show it to you on the screen. The Wall Street metric that is solidly in the green is, of course, the VIX, Wall Street's fear gauge, up 11.33% right now. And year to date, it's seen gains of 94%. Sometimes this is driven by actual fear and sometimes by lots of volatility. And at the moment, looks like a bit of both. We've got Atlanta Fed President Raphael Bostic dropping a bit of a bombshell this afternoon during an interview with Reuters. As people around the world still wait pretty much for months for all kinds of deliveries due to the tangled supply chain, Bostic now says supply chain challenges are actually starting to show signs of easing and that, quote, trucking companies are no longer turning down requests because of capacity. But by the same token, demand is still sizzling. The March U.S. global trade deficit hit a $109.8 billion record. The U.S. is still importing and consuming more foreign goods than we produce and export. And with China still in the throes of COVID lockdowns, fresh data today from the China Customs Bureau show that China's April exports rose at the slowest pace, interestingly enough, year over year since June of 2020. Month over month comps, 3.9% growth versus 14.7% in March. C.H. Robinson has a huge international supply chain business which manages about $28 billion of freight by train, truck, plane, and ocean. In a Fox Business exclusive, let's get the real story from CEO Bob Biesterfeld. Bob, great to have you on. You know, if anyone's in the supply chain trenches, it's you guys. Are you seeing the unwinding that Raphael Bostic is seeing?
Well, it's great to be with you here this afternoon, Liz. I think there's a lot to unpack in that comment, and maybe I'll start domestically here in terms of truckload. And the good news is, I think for shippers and receivers and manufacturers, is that we are starting to see some moderating in kind of the balance between truckload supply and demand. Internally, we track what we call routing guide first tender acceptance, likely what he's referring to. And we did see in first quarter and even into second quarter some improvement in terms of how routing guides are holding up. Or said differently, more carriers are accepting those first tenders or those offers, but certainly not every carrier is accepting those first tender offers. And we're still seeing, in many cases, secondary carriers having to come in to actually move the freight. Globally, you mentioned China and, a slowing rate of growth, but a growth rate nonetheless. And we delivered that on the global supply chain in a time where, candidly, we have as many people in China locked down as we have in all of the United States, to put it in perspective, and two of the largest global seaports in the world being impacted.
Well, that's why I ask. What is he seeing and where is he looking? Is he really looking at the bigger picture? You guys are on every continent except Africa. And when you look at all of the planes, trains, freight, shipping, everything that you do and everything that you touch, I know you have about 85,000 contract carriers, 100,000 customers. To say, oh, trucking companies aren't turning things down anymore, just as demand continues to be very strong. Is he almost wishing it to happen? Because that's what the Fed really wants. They want demand to come down so that supply chain problems can ease.
Well, what we have seen is some greater throughput through the ports, which is an improvement, but we're still not back to pre-pandemic levels. We did see in the back half of March and the beginning of April some softening in the overall truckload rate indices and kind of that balance between available trucks and available loads. But I will say over the course of the last 4 weeks, we've seen some normal kind of seasonal progression as that bounces off the bottom. Mm-hmm. For people that are purchasing transportation, the rate fundamentals haven't changed all that significantly, mainly due to the fact that we've had tremendous increases in diesel fuel. And so costs to consumers and to businesses really remain kind of flat to even up on a year-over-year basis.
And in fact, the current average for diesel is about $5.55 a gallon. Compare that to what we saw a year ago. A year ago, we had $3.11 per gallon for diesel. So that makes me wonder, how can inflation come down if the pass-through costs are going to have to be hiked because fuel is so expensive?
Fuel is absolutely, it's a record high for diesel fuel. And for a motor carrier, for a trucking company, if drivers are typically the most expensive component of their business and fuel is a close second. And at these levels, fuel is probably the most expensive component of a trucker's business. Consider that a truck on average gets about 6.5 miles per gallon. If a truck is driving in California right now, where the average price of diesel is closer to $6.50, they're paying $1 a mile in fuel costs alone, which makes it really difficult to to really take costs out of the supply chain at those levels.
Bob, transportation tends to be, if you will, a canary in the coal mine when it comes to recession. When it's really hot, we know that there is a ton of demand. And when it starts to slow, we know that maybe that is sort of the precursor to a recession. Transports are falling today by about 2.25%, and they are well off their highs. What do you see? Do you, if you put on your economy hat, or, Econ 101 hat as the head of one of the largest global shippers, do you see a freight recession?
I don't, and I know it's been largely talked about in the media. What I have seen and observed is over the course of the last 6 quarters, we've had absolutely unprecedented increases in the cost of transportation, specifically truckload and in ocean. We've now started to see that moderate, and it's coming down off of all-time highs at the beginning of the year. But if I look at the supply and demand fundamentals here domestically related to truckload, we're still at levels above where we were in 2018, which was really kind of the last peak of the trucking cycle. This is a cyclical business, and capacity comes in and out of the markets. But the only capacity that's come in, the only new trucks that have come in over the course of the past couple of years are small businesses, small trucking companies with the average fleet size of 1 or 2 trucks. And we know that those carriers have come in at an elevated cost base. Consider today that a 4-year-old used truck with a sleeper on it is selling for almost twice what it was just pre-pandemic. So it's costing $100,000 for that truck, and the 10-year average was closer to $50,000. So the sustainability for some of these small businesses will be challenged, but we at C.H. Robinson can help them through our vast global networks.
Bob, thank you for clarifying, because you guys are the ones who actually know. As I said, you're in the trenches. And C.H. Robinson's one of the few stocks that is in the green today, up about 1 1/3%. You guys are definitely higher year to date. Thank you so much.